Hello, hello, hello. How's it going, everybody? Welcome to a Capital Hungry Market Update and Trade Ideas webinar. We will be going through some fundamental and technical analysis, as well as trade ideas to use for the following sessions, as well as following days to come on gold, XAUUSD, GBPJPY, GBPUSD, EURUSD, USDCAD, and US30. Before we get into it, please do me a favor, drop a like on the stream, as well as make sure to read the YouTube description, as all of your capital hungry resources are linked accordingly within the YouTube description, and you have tons of resources at your fingertips, from the Capital Hungry newsroom, which is on the Twitter feed, to the Capital Hungry free Telegram analysis channel, as well as this YouTube page itself, where if you check out the playlist, there's tons and tons of educational content regarding the financial markets. All right. So let's jump right into it here, shall we? The main thing and the main fundamental focus within the market since the last week has, of course, been the new COVID variant, Omicron. I don't know how to say it, but the new COVID variant. This new variant brought some short-term fear, uncertainty, and doubt within the markets, and this fear, uncertainty, and doubt led to a drop-off on global equity markets, as well as strength in the Japanese yen, some short-term strength in gold, as well as some strength in the volatility index. But a lot of this downside so far from the new COVID variant has been priced in, and we have to go over a few concepts that I want you to understand accordingly, okay? So we're going to go through those concepts first, so you can understand the overall, sorry, I'm just getting a little bit sick here. So you can understand the overall macro market sentiment and the fundamentals in play, as well as market cycles, timing, and so forth. And then we'll talk about everything else. So what I want you guys to understand, and I'm going to ask you guys a list of questions here. When we saw the drop in the global equities, for example, the German DAX, UK FTSE 100, as well as US 30 stock market index, and the other regions as well, you can see and understand that there's two important factors here that a lot of people are ignoring. Number one, the market timing of coming towards the end of the month, as well as the end of the fiscal year with only one more month left in the fiscal year. Two is that the sell-off and drop we saw on global equities came from new all-time highs being printed. The market moves in waves, and we've seen these short-term fear spikes and catalysts many times that can create intraday pullbacks and also be a reason for buyers to take profit and liquidate positions to set up better buys from more favorable demanded price points, okay? So an example of this is if we zoom out and look at the US 30 here and come on the daily chart, you can see ever since the pandemic crash, the US 30 stock market index, with the market optimism and support of the central bank literally flooding the stock market, as well as smart money riding that wave of central bank support, we've had very strong bullish market structure. But as you have significant higher highs printed, you can see that it is very normal to get these profit-taking moves and pullback plays that can create some very aggressive corrections, but still don't break the overall bullish market structure. And at the end of the correction, when you find that floor of support, you can see that buyers jump back into the market, maintain the overall bullish market structure, and still continue bullish, right? So what I want you to understand is that we've seen something very similar, and this has been the same thing we've been seeing over the last year and a half. We have had tons and tons of COVID fears that create these potential pullbacks from highs in the stock market that get faded out, buyers jump back in, and you still continue overall bullish with the trend as long as there is no long-standing fear. Let me give you an example. When we first had the crash, we had the support of the central banks, but we were still getting these aggressive pullback plays during US lockdowns and so forth. Then, of course, after the US lockdowns, we had COVID still rampant and still having negative effects and fear from COVID, but vaccines come out and fade the effect of the COVID impact. Then after the initial COVID impact, we had the Delta variant. Delta variant risks created some downside moves as well, but still again gets faded out as the main focus has been on global vaccination numbers and continuing to pump the pockets of big pharma, and it gets faded out and continues back bullish. So what we have seen so far is that even though it has been blown up in media that this new Omicron virus is so dangerous and it's bringing so much market fear and it's bringing so much fear, uncertainty, and doubt, when you're looking at the overall structure of the stock market, we are still very bullish. This downside move that we had with the new COVID variant still came down and didn't even come to retest this 34K demand zone, and it still came from new highs being printed by buyers. In my opinion, this has been a short-term fear catalyst as we're coming towards the end of the fiscal year to give stock market buyers a reason to liquidate buy positions and create this pullback phase where, in my opinion, we could still come down to 34K flat demand zone and still be very bullish on US 30. So what are the takeaway points? Well, we can understand that we had market fear regarding this new COVID variant, but even with the market fear, it was still a pullback from new highs being printed, and the pullback and downside move from market fear didn't break the overall bullish market structure or even come down to the 34K demand zone. And a lot of that fear that we had from the previous week has been priced in. What do I mean it has been priced in? That the information we got regarding the new COVID variant has already been digested and understood by investors, and the order flow adapted accordingly. So what was the news and information we got? Well, we got that there's a new strain of the COVID virus, which is the Omicron variant, and it has tons of mutations and it can potentially be higher risk. We had countries potentially putting on travel restrictions to South Africa, and some countries also going back into lockdown measures. We also have had fear that this new variant might be resistant to the vaccines. All of those points that I just told you have been priced in and caused this downside move. For us to continue down deeper on global equities, we're going to need new fundamental information regarding the fear with this new COVID variant. So unless we see headlines when you check your news terminals or you check your news resources, unless we see headlines that it is confirmed that this COVID variant is resistant to the current vaccines and we're going to need a new vaccine created, or we have countries promote more travel restrictions and go into further lockdowns, unless we get those confirms, there's not going to be any more fear being priced in by investors, and there's a high probability that we could even get a double bottom down to these lows like you've seen many times here before, and still continue bullish to target the previous highs, right? I want to show you something else that's interesting to support this concept, right? So when we come here and look at our sentiment indicators, you can see the Japanese yen and the volatility index had very clear upside spikes from their low points. But these upside spikes fail to break significant lower high price points that are maintaining the bearish market structure and integrity of the bearish market structure. You can see the Japanese yen last week had a very aggressive upside spike, which led to a drop in pairs against the yen like GJ, EURUSD, AUDJPY, and so forth. But it was not enough fear and not enough volatility for us to break above this last significant lower high price point or break above this significant price point on the VIX. You can see around 88.5 and 89, is the last price sensitivity area here where we had sell orders collected and a downside move to these lows. And the volatility index, we had an upside from these lows, which this was the last lower high point here where we had sell orders collected and price come down to these lows. You can see both the Japanese yen and the volatility index during that fear stage when the new COVID variant was announced, both had equal upside spikes, but failed to break those significant price points, maintaining the bearish market structure and integrity of the bearish market structure, right? With the US dollar being the inverse. The reason why Japanese yen pushed bullish during the market fear is because the Japanese yen follows safe haven properties, and during times of fear, money gets pooled into the yen. You see an inflow of buy orders. Same thing with the volatility index, as it's a fear and greed indicator of the North American stock markets, right? But the US dollar, yes, it's a safe haven currency, but as the world reserve currency over the last year and a half, because of the Federal Reserve heavily increasing the US money supply, the US dollar has been following the policy positioning of the Feds. So as the Feds have given us more confirms of tapering, potential future rate hikes, as well as pricing in, as well as actually starting tapering, and US economic data has been stronger, dollar has been pushing bullish, pricing in the policy positioning changes of the Federal Reserve. So when we had the fear catalyst come into scene of the new Omicron virus, dollar actually had an impulsive downside move to retest its previous intraday high. The reason it had this downside move is because it shows investors that if this new Omicron virus is very high risk and can impact economic activity, that the Feds will not be ready to start tapering or rising interest rates yet, and more stimulus is going to need to stay active, meaning the Feds will need to turn the money printer back on, and that is pricing in a bearish move on the dollar. So when we had that fear catalyst come into play, you can see from new lows being printed or previous lows, yen had this upside spike and failed to break this price point. Volatility index had this upside spike and failed to break this price point, as it's primarily going bullish on the market fear. Dollar pushed down off new highs being printed to retest the previous high because investors are pricing in that we might not see rate hikes as aggressively as we thought, and more stimulus may be needed, which is a bearish impacting factor on the dollar. And of course, global equities did this equal drop from new all-time highs being printed across the board. But this is what's very important, and I want you guys to look and understand this impact very importantly as well. For volatility index to break above 28, and for Japanese yen to break above 88.5, and for dollar to break below 95.9, and for us to play a stronger Japanese yen or a stronger volatility index and fear in the volatility index, or downside on the dollar, we are going to need more market fear, okay? So let's label that. We're gonna need new information regarding the Omicron virus and variant that brings market fear. That is something we don't already know, okay? So that would be more lockdowns or countries going into lockdowns, which would impact economic activity and bring market fear, more travel restrictions, and current vaccines resistant, right? Over the next weeks, as we get information regarding this new variant, right? If we get confirms that it's more dangerous, and that it can spread faster, or the symptoms are worse, or there's more risks involved catching this new variant, and that leads to countries going into lockdown, as well as further travel restrictions and this new strain is resistant to current vaccines, then you will see volatility index break above 28, Japanese yen break above 88.5, and dollar break below 95.9 and have these correlated moves, right? If we get more market fear and these confirms regarding in any of your news headlines, whether you use the capital hungry news Twitter and so forth, right? Pay attention here, pay attention. If we get these confirms in this upside here on the yen and this upside on the VIX, then we will see deeper pullbacks and more market fear to break below here on the US 30 and come down to 34K before seeing a potential bounce. As investors will price in more market fear and potential impact to economic activity. We will see gold turn bullish on the market fear instead of being so bearish. GBPJPY will break below this price point and continue bearish. The dollar will be a bit more bearish independently, so we'll see a pullback on pairs like GBPUSD from the lows, and EURUSD will see a pullback from the lows as well, right? Because if we get the more market fear, the impact on the Japanese yen with those fundamental confirms of more lockdowns, higher risk of this variant, more stagnation within economic activity with travel restrictions, or the vaccines being resistant, then yen will break above here, VIX will break above here, dollar will continue down. We play that Japanese yen strength for GJ sells. We play that dollar weakness for GU and EURUSD pullback buys from lows. And we play the VIX volatility index strength with sells on the US 30. But for the time being, we don't have those further confirms yet. We're going to need to get those when we're looking at the reactive headlines. For the time being, what we do have is still maintaining the bearish market structure on Japanese yen, with sellers continuously printing lows and making its way back down to the lows. When you zoom out on the volatility index, we're still very bearish, as it's the inverse of the US stock market index. And when you look at the US dollar here, we are still very bullish, with buyers continuously printing intraday highs. When you're really looking at the US dollar, even if the US dollar, when you're looking at this raw market structure, does break below 95.9, and we play those short-term bears accordingly, if we get more market fear, we would still be bullish looking off these retest points, as overall, based on those fundamental confirms, I'm telling you, investors have been pricing in dollar bulls following the Federal Reserve sentiments. Okay? So, what do we have right now? Well, what we do have is that the fear that we had from last week has been priced in. We already know we have a new variant. We don't know too much information about the variant. And so far, there's been a bit of travel restrictions, but not any major lockdowns. The US confirmed it's not locking down yet, and we don't have confirms that the current vaccines are ineffective for this new variant. So right now, markets are still optimistic. As long as US 30 stays above 34,800 and 35K, as long as the Japanese yen, stays below 88.5 and the volatility index stays below 28, and as long as the volatility index stays below 28, then we still have markets overall optimistic, and we're still going to be playing that sentiment accordingly. Does that make sense for everybody so far in terms of understanding the new variant, the impact of the new variant, the impact it had so far, how it's been priced in, and more confirms we would need to play market fear, which we do not have on the table yet? All right. Also understanding that all of this is happening as we're coming towards the end of the month and the end of the fiscal year. Okay? So that was just a quick lesson about the fundamental impact, the market sentiment, and understanding that so far. And now we're going to look at the economic events we have overnight and through the next sessions. And then we're going to do our trade ideas analysis on gold, GJ, GU, EURUSD, USDCAD, and US30. Okay? So, in terms of economic events, for November 29th in the evening, we still have some housing information from Australia, but primarily the focus is going to be overnight from November 30th here. So this is the economic data that we have overnight through the London session, as well as tomorrow morning with the New York session. Okay? 2:45 a.m. Eastern, we have France's consumer spending, CPI, and GDP, which is going to impact euro pairs. 15 minutes after that, at 3 a.m. Eastern, we have Italy's GDP, quarterly and yearly, which is going to impact euro. At 3:55 a.m. Eastern, we have Germany's unemployment change, which is going to impact euro. And then at 5 a.m. Eastern, Eurozone overall HICP flash data, which is consumer price changes, and also at 5 a.m. CPI data for Italy. Okay? India data is not too important unless you're trading the rupee, which I don't think anybody's trading the rupee here. But at 8:30 a.m. Eastern, during our New York session, we have Canada's GDP monthly and quarterly. At 9 a.m. Eastern, Case-Shiller data monthly and yearly for US, and then the consumer confidence report at 10 a.m. Eastern. Okay, so we do have some economic data. Most of it is for the Eurozone, but we do have some bit of US data, more importantly being the consumer confidence report at 10 a.m. Eastern, where the expectations are a drop in consumer confidence. Now, let's look at some trade ideas. I want you guys to understand a very key concept here about market volatility and volumes, okay? You can see that we're entering a bit of a consolidation in range, and on GJ, same thing here with the gold, we're starting to enter a bit of a range. This is perfectly normal. The market moves in phases, and we're also at the end of a monthly period with potential repositioning of order flow in the new month. We had very strong impulsive moves on gold and GJ, so you're not always going to have impulsive moves every single day, every single week. For example, look at here. You can see impulsive upside move, consolidation for a day. Impulsive upside move, consolidation for a day. Impulsive upside move, consolidation for weeks. Right? So, with the fact that it's the end of the month, as well as a lot of the fear and volatility from last week has been priced in, and we don't have any new fundamental catalysts on the table yet, there is a high probability that the majority of the markets we are trading can be in technical ranges, right? With higher volatility and volume coming in fresh during the start of December, where later in the week at the start of December, December 3rd, in the start of the new month is when we have the US NFP, unemployment data, PMI. So I do see that this week is going to be slower until later towards the end of the week, Thursday, Friday. So don't be surprised for the first couple of days as we're closing off this week, as we're closing off the month of November. And of course, if we don't have any new fear headlines regarding the variant Omicron, right? That there's a high probability Japanese yen markets and overall will just range, okay? But anyways, these are the trade ideas that I see, and I'm going to label those out now. So let's look at gold here. Gold is at a very, very significant and important price point where we're in a bit of a squeeze. We're still maintaining higher time frame bearish market structure, which you can see here in doing a repeat of the 2008 financial crash. Upside here, highs peaked, upside here, highs peaked. You enter this bearish market structure on the higher time frames. You enter this squeeze and wedge pattern between this demand zone, and I do still see the potential that if we don't have any new market fear and economic data is good, for us to still make our way back down into these low points. But we're in this squeeze of maintaining intraday bullish market structure. You can see here the safest sells at this point are gonna come below 1781s, and you can see gold is still overall higher time frame bearish and faded out this upside strength here with the last, obviously, of Joe Biden selecting Jerome Powell to be the Federal Reserve head again, which was a bullish impact on the stock market and a bearish impact on gold. Something else we want to understand and look at here, right? This downside move here was from Joe Biden selecting Jerome Powell to be the Federal Reserve head again. This decreased the demand of gold as a precious metal safe haven. Then the following day, we had this continuation move to this demand zone and retesting that higher time frame bullish market structure, right? Then last week, we had this upside fear spike that came from the new COVID variant, but it got instantly canceled out. So on gold here, I am more on the bearish side, with the safest sells being below 1781s here, okay? Sorry about that, 1 second. So, when I'm looking at gold here, you can see we're having stronger impulsive sellers moves, higher time frame bearish market structure. We had sell orders collected from this area and the fear spike from the COVID variant being faded out, and very strong potential to fill this range with the liquidity grab we had at 1772. When I'm looking at gold, 1789, 1795, and breaks below 1781, I see potential sells still. Okay? I only see further buys on gold if we break above 1803, and even that would still be some short-term buys to set up better risk versus reward sells from a retest of the bearish market structure at 1820. Okay? The information that I'm deducting is that the main sentiment that's still holding weight is the optimism from the Feds talking about the economy being more robust and stronger, as well as Jerome Powell being selected to be the Federal Reserve head again. This was the short-term impulsive spike. You guys actually saw me take advantage of this buy as well. I sent it in the free channel. You guys can just check the link in the description, which made sense as we were respecting the demand zone in bullish structure and had the initial fear from the new COVID variant. But that short-term spike just led to more sell orders being collected institutionally and coming right back down into this zone and failing to break above these order block highs here, and still showing me that the sentiment from the Feds is holding more strength and there wasn't enough market fear from the new COVID variant to keep gold more bullish, right? So these are the trade ideas I see on gold. Okay. Now, GBPJPY. Overall, GBPJPY on the higher time frames is extremely bullish here since the last year and a half with the pandemic crash. You can see we had highs printed by buyers, then the Bank of England didn't hike interest rates, leading to this downside spike. Then we had the COVID variant fear bring us down all the way almost down to this demand zone around 150 that it's failed to break since March. We're going to need a lot of economic market fear to break below this significant price point, and we can see an intraday order block being created of support the same time that we can see that the Japanese yen is still bearish. And even though it had that upside spike, when you're looking at the yen's overall market structure, it's very bearish since January, start of the year, right? So when you're zooming out, yes, we had this upside spike on the yen, but it's still overall bearish with potential to make it back down to these lows. Okay? So I don't want to jump out of my Japanese yen bearish bias unless we get those confirms of more market fear, then we will adapt accordingly. So on GJ, on the intraday time frames here, we can see we had a new low printed. Every time you get these lows printed, you enter a consolidation phase or have a bit of a pullback phase. The same time that we can see the Japanese yen is also softer right now for the time being too. Okay? So when I'm looking at GBPJPY, with this intraday order block, I'm just going to play the consolidation zone, but I still see the potential buys from 0.500 as well. If we break and retest above 151.500 and potentially 151.8, I still see GBPJPY entering a pullback phase to retest 152.8, with the green boxes being buy zones and the red boxes being potential sell zones. Or I would only take sells at this point on GJ if we break below these lows printed at 150.8. Otherwise, for the time being, we can see this. We can see that across the board, our UK equities, this is the UK FTSE, did that fear spike with COVID new variant, but still faded it out and had a pretty aggressive bounce and is still pretty much bullish across the board. And it's completely normal that we've seen the equity markets do these pullbacks many times before. And the fear gets faded out and you still continue bullish as the greedy stock market buyers, the smart money, the market makers, they keep chugging away that greed train. Do you understand what I'm saying? So we can see that UK equities still didn't break overall bullish market structure. Japanese yen didn't break that significant lower high price point, and GJ didn't break below 150.5 key level. So I do still see the potential for this. With only sells being if we come to retest the bearish market structure in previous impulsive lows here, or only sells if we don't hold our buy zones and we get more market fear and new market fear, like obviously countries going into lockdown, confirmed risks regarding the variant. Okay? Does that make sense so far? Does that make sense so far with gold in GJ, the market sentiment, and everything else? Now, GBPUSD. GBPUSD on the higher time frames is a completely different beast compared to GBPJPY, even if we have GBP as the primary in the quote, because the secondary in the quote is the US dollar, and the US dollar is the global reserve business currency, so the US dollar holds a lot more weight. sorry about that. So the US dollar holds a lot more weight regardless what pair it's in, right? So as the dollar is still bullish on the higher time frames and holding above these previous highs, GBPUSD and EURUSD are still bearish, right? You can see that from these lows, it's very normal for GBPUSD when these lows get printed to have some very aggressive pullback phases. But we don't have the confirms for that potential pullback phase yet. For us to see this pullback phase on GBPUSD, we would need to break above this price point at 1.335 technically, and we would also need more market fear, and we would need the dollar to break below here technically. I'm going to show you guys something very interesting. The correlation between the Japanese yen price point and GJ price point is here. For GJ to break below these current lows where we had this double bottom so far, right? For GJ to break below 150.8, Japanese yen would have to break above 88.6. Okay? And for GBP USD to break above 1.35 and to start to break this corrective structure and enter that pullback phase, US dollar here would need to break below previous high 95.9 and enter its bearish pullback phase here at 94 flat. When you look at the movement, here of the US dollar, for the majority of its part, you're going to see it's primarily the inverse of GBP USD. And just in terms of the technical market structure and movement, right? You can see bullish ascending channel with those fundamental reasons stated. But then when you come to GBP USD, you can see the inverse, bearish descending channel, right? So I know a lot of people are thinking, gee, okay, maybe we're going to start to get the pullback from these lows. But the only way I see us entering this type of pullback phase is if dollar breaks below that 90, that significant previous high price point, GU comes above 3.5, then we can have a potential pullback on GBP USD and see something like this take place. Does that make sense? So for us to see GU break above 1.335, you would have to see dollar index and its individual movement break below 95.9 previous high to retest bullish market structure. GBP USD is and enter its pullback phase to retest bearish market structure. Isn't that extremely interesting? Does that make sense for everybody? The correlation, how you can use that as confluence, for example, how you can use those significant price points of interest, and how you can use that correlation in understanding the fundamentals and market structure. Right? So on dollar, when we're looking at GBP USD, our make or break price point on the dollar is 95.9. Okay? So when we're looking at the analysis here, don't worry about this trend line. This is on the intraday analysis. As long as GBP USD still remains below this previous low point, I still see potential sells. If we come below here, I see sells, and below 327 sells. Okay? I only see potential pullback buys above 1.34. Okay? because this is what I would see. For me to take pullback buys or the buys, we would need to break above this 1.334 price point. Break above this corrective structure here, this bear structure here. Break above previous lows, which is here. Dixie break below 95.9. Market fear. This is the only way I would take GU buys. I don't want to start guessing a bottom when we don't have a confirmed bottom yet and we can still continue bearish with the dollar strength. I would only take GU buys with these confirms here. All right? But keep in mind, some of these trade ideas might not play out until later in the week. We're coming towards the end of the month. We have NFP and all that stuff at the end of the week. We're going to have the new order flow set up for the month of December. So don't be surprised if overnight and tomorrow we still just continue to range on the majority of these pairs. You know what I mean? As a manual retail trader, you don't just want to do analysis on the fundamentals and technicals. You also want to understand the potential trading conditions and what phase of the market movement are you in. Are you in a trending phase? Is there high market volatility? Have events been priced in? Are we in a corrective phase, such as a pullback or a consolidation zone? You want to adapt to the market accordingly, right? Otherwise, below these price points, still looking for those sells playing the bearish market structure. Euro USD, same idea as GBPUSD. Even if Euro USD comes to this previous lower high point where we had a low printed by sellers, profit taking by the sellers here, pullback created to a better supply zone, sell orders collected here, and new lows printed. This is the last significant price point maintaining bearish market structure, right? Even if we come up to here, sells, reject 1.311 sells, break below 1.25 sells, targeting previous lows. I would only be looking for buys to retest the higher time frame bearish market structure if we had US dollar break below 95.9, and we had a break in retest above this significant price point and break above 1.1385 to set a better risk versus reward sells from this area here. Otherwise, my main bias is still the potential sells, as dollar is still bullish. Euro USD is still bearish with bearish market structure, bearish price action, sellers continuously printing new lows, and so far the market fear getting faded out and not breaking the bearish market structure. Now, USDCAD. You can see here that USDCAD has been very similarly following dollar movement, as well as even when dollar had this pullback from highs here, USDCAD was still bullish, printing new highs. The reason for that is because the Canadian dollar was weak, because the Canadian dollar has a strong correlation to crude oil. One of Canada's main revenue streams is the exportation, is that a word? Is the exporting of crude oil, okay? So the Canadian dollar follows crude oil price very closely in terms of having a positive correlation. When crude oil is very bullish, the Canadian dollar is very bullish. When crude oil is primarily bearish, the Canadian dollar is bearish because investors price in that fundamental concept that I'm just telling you about the revenue, right? So, last week when we had the market fear come into the scene, it also led to a downside move on oil from the highs, right? And even same thing with oil here. For anybody wondering oil analysis, oil still extremely bullish here across the board. We've had these pullback phases from highs many times before, right? Yes, oil can come down to potentially $60 a barrel again as we have this corrective bearish market structure, but it's still overall bullish following the market optimism and higher demand as economies have been coming out of lockdown and more people have been getting vaccinated and the consumption of oil has been through the roof. But anyways, what I was talking about more importantly was the fear catalyst last week with the new COVID variant led to this downside spike on oil as well. This downside spike on oil led to weakness in the Canadian dollar, which still kept USDCAD bullish, even though the dollar has some short-term bears. For anybody who was wondering why UCAD was still bullish. So, I'm still very bullish on UCAD with this overall market structure, potentially even looking for pullbacks to 1.265 for better risk versus reward buys to the upside here. But these are the trade ideas I see accordingly. This is just the previous high here, right? If we remain below this previous high, I do see the potential for pullback sells down to 1.266, last demand zone here, for potential better risk versus reward buys. Or the safest buys at this point is above 1.28300 higher time frame key level, or above these previous highs at 1.28. I'm still playing the USDCAD bulls, but this pair is very well known for doing aggressive pullback plays whenever some significant highs get printed, like here, 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 and here. You can see this bullish market structure extended for a period of months here, but every time we had very significant highs printed, you also had very aggressive pullback plays to better demand zones before continuing up, right? You can even see the same thing with this bullish market structure stretch we had here. Every time you get significant highs printed and some exhaustion from those highs, you can see you do enter a pretty correlated pullback phase, right? So it wouldn't be out of the ordinary that we see that potential pullback phase before continuing back up again. That's all I'm potentially anticipating, especially when we see technically from this high point that we had this high printed by buyers, right? Buy orders flooded the market from this demand zone here. That the buy orders flood the market, we print new highs above the previous highs, and then see some profit taking by buyers here and another push up to these highs, but not enough buyer order flow to break above this price point. Whenever you see a technical double top or a double bottom, what it's showing you behind the scenes is exhaustion. It's showing you that there's not enough buyer order flow at the current time to break above this price point, so you're seeing buyers take profit and exit out of the market, which can possibly give you a deeper pullback phase to collect buy orders from a more favorable demanded price point to have enough volume to break above higher, right? It's like here. Let me give you the example. Sorry, my screen got laggy there. It's like the example here. Highs printed, you still get a pretty aggressive push, but not enough buy orders to revisit the previous high or break above higher. You enter a deeper pullback phase to a more favorable demanded price point. then have enough volume and order flow to extend higher as more buy orders flooded in from a better price point, right? Nobody's going to want to keep adding in and stacking orders without the fundamental volatility from continued highs. This transaction between buyers and sellers, of buyers entering the market, taking profit and exiting out, sellers jumping in hand to relieve them out of the market. This is what creates the technical waves that we play. The impulsive moves versus the pullbacks, the consolidations versus the breakouts. When you can understand that order flow movement behind the scenes, the technicals become a lot easier to digest and dissect and playing with the trend and structure. Okay? So yeah, those are the trade ideas on USDCAD. You can always rewind it and look to see what I was looking for again. Last but not least, our bullish beast, US stock market index. I want to talk about something funny here. Did you guys notice that when the COVID fear came out last week and the market did this bit of a dip, traders went into a panic? It was all over the news headlines. Stock market dropping 3%, 5%, whatever it may be. Equities are weak. Fear regarding the new variant bringing risk to the market. Everybody was talking about like it was the end of the freaking world, right? But these pullbacks from these fear catalysts are completely normal, like I told you earlier. But what's more important is everybody's talking about that little bit of fear and how it's the end of the world, but nobody's talking about how the stock market doubled in value from 19K to almost 36K. And nobody's also talking about how the stock market is also 6,000 points above pre-pandemic levels. So don't fall victim to mainstream media, the hoopla, the noise of other traders who are like, oh shit, like what's going on? This is so crazy. They don't understand the market cycles. They don't understand the bigger picture. They don't understand the macro image. They don't understand how the mainstream media majority of the time is a distraction. When you look at the stock market here, do you see any fear? I don't. Yeah, sure, we got a pullback here. We got a little bit of a blip of a pullback from a new high being printed and a catalyst at those new highs for buyers to take profit out of the market, liquidate positions, and push us down to a better demand zone. But every time that happens, these demand zones, buy orders get collected, we continue right back to the previous highs and higher and still chug away to the upside. Do you understand what I'm saying? Does that make sense to everybody? Don't forget that over the last year and a half, when we've still been dealing with lockdowns, when the people's livelihoods have been destroyed, when people have been having fears around vaccines or COVID overall, when people have lost their jobs and lost their business, the stock market still doubled in value and didn't give a fuck about your life. It not only doubled in value, it also went 6,000 points above pre-pandemic level. Where, don't forget, this pre-pandemic level was still all-time highs in a major rally during the Trump era. Do you understand what I'm saying? Where we fell from wasn't a low during the crash of the pandemic. We fell from an all-time high and are well above that all-time high price point, even though we've been dealing with COVID the last 2 years. So what's that tell you? It tells you that a lot of the fear within the media is only short-term fear that is a catalyst for buyers to liquidate positions and take some profit out of the market and to set up better risk versus reward buys from better demand zones. You're going to see the same thing on FTSE 100. UK index, what do you see? Same thing. Yes, with some short-term fear regarding Brexit or UK lockdowns or max procedures or vaccine issues, yeah, you get these aggressive pullback plays. But overall, since the start of 2021, UK stock index and every other region has been extremely bullish because the stock market has not been following COVID. What has the stock market buyers and stock market been following? Pop quiz. Why has the stock market been so bullish? Because if the stock market was following the fear of COVID, it would not be this bullish. It would not be double the value from the crash point because COVID's still been going on the last year and a half. The stock market has been following the literal pumping of the markets and Federal Reserve support as the Federal Reserve exponentially increased the US money supply. As the Federal Reserve exponentially increased the US money supply, they took these US dollars and literally pumped up various assets through their asset purchase program, which includes real estate, properties, land, other assets and commodities like gold, oil, commodities such as soy, lumber, and everything else, because they were supporting the economy. The stock market has been artificially pumped and artificially bullish, and the smart money market makers have been riding the wave of the Feds. Okay? So, when I'm looking at US 30 here on the intraday time frames, you can see we got a very strong reaction from almost 34,600. If we come to double bottom at 34,600, I would still be looking for buys in these areas and buys above 35,200 to at least revisit these previous intraday high price points. I only see sells below 34,500, which those sells would still be to retest 33,500 buys here. And these sells are only going to come into play only further sells below 34,500 with new fear. What is new fear? New fear is something that we have not already gotten, because what we got last week has already been priced in by investors. Remember, the market and market participants, the smart money, they are always trying to have an edge on everyone else. They're always trying to have an edge on the person next to them. Whether it's having the most resources, the fastest connection, the best supercomputers, the best teams for your algorithms and so forth, hiring the best analysts, getting the best technology. So that is the reason why the pricing in concept exists. Okay? That is the reason the pricing in concept exists. That is the reason that there's this common Wall Street saying called buy the rumor but sell the actual news. Because with the rumors, investors, greedy investors, start to move in ahead of time and price in events that haven't even happened yet, just based on the rumors, just based on the potential impact it can have. Does that make sense to everybody? That's the whole concept behind pricing in. Investors price in events ahead of time with the potential anticipation it can happen to have that edge on their competitors and on everyone else. So the fear we had from last week has already been priced in. We're going to need new fear regarding the variant, such as further lockdowns, such as more travel restrictions, and confirms that the current vaccines are confirms that the new variant is resistant to the current vaccines. If we get new fear headlines and break below 34,500, then I see the sells. Okay? But all right, everybody. Thank you for attending this Monday Market Update webinar as well as Trade Ideas webinar. I gave you guys some lessons on fundamentals and technicals. I gave you guys a full breakdown of the COVID variant, the new variant, and the impact it had. I gave you guys a full breakdown of analysis and the economic events to come, the fundamentals actively in play right now, analysis on volatility and volumes, understanding market timing that we're coming towards the end of the month and end of the year, and we're going to have a lot more volatility towards the end of this week. Analysis and trade ideas on gold, GJ, GBPUSD, EURUSD, USDCAD, and US30. This webinar can be used for the next sessions as well as the next days to come, but make sure you listen to me very carefully right now. Okay? I am not a market wizard or a fortune teller. So remember to do your own due diligence and do your own analysis as well, but use the information I give you if it helps. But the main important point right now is that the current market climate is that in the current market environment and market climate is that investors are on the sidelines waiting for more information regarding this COVID variant. So we have to stay extremely adaptive to the information as it comes over the next period of days and weeks regarding this new variant. Okay? This is the main division. This is the main lesson right here. If over the next days and weeks we get told that the new COVID variant is not as high risk as people thought, we get told that there's not going to be a need for lockdowns, that the current vaccines are effective for the new variant, then markets are going to be optimistic. Stock markets are going to be bullish again. Gold is going to be bearish. GBPJPY is going to be bullish. Japanese yen is going to be bearish. VIX is going to be bearish. All right? If we get told that the risks of this new variant are minimal, there's no lockdowns, and the vaccines will do the trick, you just need another booster, then markets are optimistic. We play the optimistic sentiment. But remember, we can't really guess this. We're going to have to take the information as it goes. If we get told that there's actually more risks regarding this new variant, that the current vaccines are ineffective for it, that countries are going back into lockdown, that more countries are doing travel restrictions, then we're going to see more market fear, and gold will be bullish, GJ will be bearish, dollar will be bearish, stock markets will be bearish. Okay? But so far, we are on edge, and we are in the middle of the fence, sitting in the middle of the fence, waiting for more information from these fucking corrupt politicians, leaders, and quote-unquote health experts. In my opinion, I personally think, from thinking of a point of greed, power, and corruption, that the whole point of these variants and the fear around these variants is to push more vaccinations and make money and make more money for big pharma, the lobbyists, the investors, and everybody involved with it. So I do think that they are going to say, and this is just a guess, but I do think that they're going to say that the current vaccines aren't effective for this. I think they're going to say that the current vaccines are not effective for this new variant, and everyone's going to need a new vaccine, and we might see temporary lockdown measures again if we get high risk fears regarding this new variant. But that's just my guess. I think that there's a huge agenda to get annual vaccinations and keep rinsing and repeating this process of getting booster shots and having people be more compliant and giving up their freedoms and rights. But that's a conversation for another webinar where I'll rant about that a different time. You know what I mean, though? You guys understand what I mean, though. You get my view, right? But in terms of right now, at this very moment, we do not have those confirmed yet, and we're going to have to take it session by session, day by day. All right? So thank you, everybody. If you enjoy these webinars, make sure to send a like. Make sure to subscribe and turn post notifications on. If you enjoy the content, make sure to check out your Capital Hungry resources in the links within the description. Capital Hungry News Twitter feed, which is better than Forex Factory. Capital Hungry free Telegram analysis channel. If you want more and you want daily live streams for New York session, daily market update webinars like this. I'm not going to lie to you guys right now. This webinar I just did to you guys right now is pretty much a copy and paste of what I sent the private chat this morning. You know what I mean? Right? So if you want daily market update webinars, newsroom access, key level price alerts, access to the community, London trading sessions, New York trading sessions, more educational webinars, you want to become more in tune and with understanding the market's fundamentals and so forth, then take a risk and come join the Capital Hungry private channel, and I guarantee you will not regret it. I guarantee you will learn more than when you came in. when you come to the private channel. You will learn a shit ton there. All right, everybody. So thank you so much. I'm going to save and upload this webinar. It's going to be ready to rewatch for anybody who wants to rewatch it. Everybody have a great day. Have a great night. Send me a like as well. And I will see you guys Wednesday morning, 7 a.m. Eastern for the New York scalping session. For any information about Capital Hungry, resources, and so forth, just check out the description. Everything is linked.